Hi, it's Steve and Joe from Freshagenda. And Steve, this week we thought we'd have a tour of the GDT results from this week and also a bit of a look at our latest Global Dairy Directions February update.
Okay. So a very important GDT event with the world environment being so, I guess, caught up in the uncertainty of COVID-19, as we now call it. There's a history of what's happened in the last 6 weeks since this really broke in the third week of January. So we've seen some fairly sharp falls continuing in commodity prices, but a few recoveries. So those green bars in the chart show where prices have rebounded from lows. In particular, non-fat dry milk in the US has been good. We've seen cheddar come back a little bit in the US, but certainly the Oceania market has kept falling all that time. So ahead of the result. So the result was, I don't know, I've put a comment on there, dodged another bullet. We probably did.
Yeah, it probably could have been a lot worse given the uncertainty more generally around currency, financial and commodity markets. But lower volumes offered this time. This is the lowest volume on offer since July last year.
Yep. Certainly saw weaker Chinese involvement.
Yep.
And there's various reasons for that. I think whole milk powder's got a bit to do with local production, as well as maybe a backlog. And we've got New Zealand milk slowing which is going in the background, which is an interesting effect. So that didn't draw enough response, but whole milk powder demand was actually better than long-term average.
Yeah, interesting.
For this event. Yeah, so that's very encouraging.
But it came from other regions other than China.
Yeah, we had bigger participation from the Middle East and Southeast Asia, so that's been fairly important. We saw that big exposure of AMF to food service, and that took the heaviest hit. But it's all round a good positive result.
In the scheme of things.
And it's left a couple of forward profiles, pretty flat forward profiles for milk powders, as you can see there. And that takes us conveniently to our outlook in February, which there's an enormous elephant in the room which we've got to deal with. So our outlook has been adjusted for some short-term weakness in demand. The fundamentals are still good, but milk is building.
That's right. Yeah. Heading into the European spring, pretty good margins there.
Yeah.
Which we'll have a bit more of a look at that later.
Yeah. We think, though, that steady building milk supply, that's a net position because we're seeing New Zealand deteriorate, obviously, but demand should also be supported and given a bit of a spur by lower prices.
Sure.
After we get through this trough, but the uncertainty is building great complexity into how to read some of those demand side impacts between developing regions and mature markets. Where, we have this thing about when people in the US get trapped by fear and stay inside for long periods of time, they tend to eat more pizzas.
Have you checked this with any Americans?
I've discussed it with at least 2 people in the US, and they believe that's solid. But some big ticket items, look, just kicking around, the demand side impacts of COVID we've taken account of, and I'll come on to a little bit more about how we've done that. There's a big slowdown in milk in New Zealand, which is expected to get much worse in the numbers. We've just seen the January numbers come out. They were still reasonably good. They grew year on year.
Fonterra's just this week revised down their intake estimates just before the GDT.
Convenient timing, yeah. There's a big rain event on the radar, which you can see there, which is due this weekend, which is probably going to miss again. But it's shaping up very nicely. Again, Australia giving rain to New Zealand. And we go to Europe, where there's some fairly strong improvement in pasture conditions, which we see across Europe. That's probably helping the skim milk powder stay a bit subdued there.
Sure.
And then on the demand side, some capacity perhaps in Southeast Asia and the Middle East.
Just based on their recent buying patterns.
Some trends in that. So they're good things to look at, but the hardest part of this has been how we read the sort of dual impacts between milk supply and the demand side effects of the COVID developments. And we believe you're best to run scenarios on this, because it's not just a simple one-off, one side effect.
Sure.
We've got slowing milk in New Zealand. We've also got a European situation which is developing. It looks like more milk than has been expected. So those conditions getting better. So you've got to look at the two angles on that, and which is what our DTS trade simulator does well. It lets you combine those scenarios and compile a composite of that outlook. So our directions usually like to profile some of these, and we'll be doing more extensive work on this in the March case, which is coming up at the end of this month.
Sure, yeah. Our philosophy is always, if you've got a forecast often.
Very often.
And especially at the moment.
Jo, chart of the week.
Chart of the week. We thought we'd stay in Europe for chart of the week. This is on the left-hand side a chart of the commodity milk value that we calculate for Europe, and you can just see there, Steve. It looks like it's come off its peak, just as production in those key areas of France and Germany is looking a bit better. So, but even with those lower prices, or prices that may be under pressure, margins are still looking pretty good there given the feed situation. Yeah,
pasture's going to be probably better. That's if spring holds together, and it can change, but it looks all right. And feed prices are still pretty good for milk production.
Yeah. So
yeah, look out.
Look out. We'll keep watching.
Okay. That's all from us this week, and you'll see us again next week.